And contrary to Gordon Gekko, greed is not good. Good morning, good afternoon. Welcome, everyone, to another great episode of Mid Money, where we talk about all things personal finance in the state of Michigan. Kevin, how have things been? You look pretty tan.
Excellent. They've been great. Summertime, right? Getting out to the beach as frequently as we can, which isn't very frequent at all. But, enough. And soccer's been going a little bit. So, sitting on the sidelines, catching some rays.
Sure.
So, by the way, I don't know if you've heard the trend, but a lot of, I have a couple of teens, right? Mm-hmm. They are very keen on the UV index, right? They're very interested in knowing where the UV index for that day is and whatnot. And if it's good, they want to go, outside and sit by the pool. I don't know if that's such a good thing from a skincare perspective. But the kids are really into it. They want to get, that tone in their skin, and they're tuned into it.
To be completely honest, I think this is the first time since school that I've actually heard of the UV index.
Right.
But I know I'm very much out of the in circle, or what people may or may not do at this point.
Yeah.
But
you'll get there.
Hey, I guess it makes sense for people trying to go capitalize further on it. I mean, I'm just outside by osmosis more than anything. So hey, It's sunny outside. Let's go outside.
Yeah.
Enjoy some fresh air.
Yeah.
Yeah.
How about yourself? You look a little tan yourself.
Good.
You've been getting up north.
Golf up north, beaches, and then the kids just love spending time outside too. So our youngest is gearing up for her first sports endeavor. Well, officially, so she did triathlon. So they put together a kids triathlon.
Yeah.
So they swam in the pool, they biked up and down the parking lot, and then they ran around the whole little complex. And so much fun.
Oh yeah.
Elodie had so much fun, but now she's gearing up for her first soccer season.
Oh, good.
Sure, music to your ears for soccer in your family. But
so she's at Midland Soccer Club?
I think so.
Yeah.
I think she'll be Midland Soccer. We just bought her first soccer ball, so kicking that around the backyard the best we can, and hope for the best.
Yeah. Well, shout out Midland Soccer Club. My boys, just for, they've played soccer around different teams across the state. They just finished their first season with Fusion. They did a summer club with them. It's called Super Y, and had a lot of fun with it, but the big shout out is for their announcement regarding their indoor complex. I don't know if you've read about that.
Or I heard about that.
Mm-hmm. Yeah.
What's all going on?
Well, it sounds like it's a $10 million investment into a very large indoor complex that, I don't think we've had anything like that in.
Is it going on the current property?
That's what I understand, but I'm not the expert. Maybe we'll have to get somebody from Midland
somebody
Soccer
on
Club
here to go chit-chat about that a little bit further, because I think it's so unique just with all the resources that people have. I mean, when people think about Midland, you may not think about all the great facilities we have. I know the tennis center, huge facility. I mean, obviously we host, I believe, USTA event. On the ladies' side, I think that was the, is it still the Dow Tennis Classic, I want to say?
I believe so, yeah.
Or Greater Midland, one of those two things. But besides the point, and then the soccer facility too, because the big Mother's Day tournament, which I know that whole area can just be swamped with people.
Right.
Irregardless, what weekend it possibly could be in soccer season. But hey, good for them.
Yeah.
Hats off to them. So have they raised the money already, or is it in fundraising process?
I'm assuming it's in fundraising process. I just received an email yesterday talking about sponsorships and whether it was for corporations or individuals or whatnot.
Sure.
So it looks like they're just maybe started the fundraising process. I'd like to think that they already have maybe some core funding aligned, but I'm not sure.
Well, I think between that, Greater Midland Community Center, having their whole new building unraveling too, I mean, a lot of good things happening for our region.
Yeah, absolutely. Good stuff.
So it kind of brings back going to the market just a little bit. The market has been, with the absence of a little bit in July, pretty muted so far.
Yeah.
This calendar year, which is absolutely fine. But I think when volatility does come back into picture a little bit, sometimes people can be just a little bit off-putting because, hey, we've enjoyed, I think up until July, the last 7-8 months, we haven't had a 2% up or down day in a very long time. Now, I know in context, 7-8 months may seem like a long time for us, but in the grand scheme of the markets, I mean, when you think about long term, you think about 5, 10, 15, 20 years. And so volatility happens, and it's only natural. I think a 5% up or down movement happens on average a couple times a year, at 10% on average once a year. So it's
and we just had that move a couple of weeks ago.
Yeah, in July.
Yeah, right. So what are your thoughts about that?
I think part of it seasonality.
Yeah.
A little bit. There's always going to be months that do a little bit better throughout the calendar year than worse. And so when you go think about the summer, if you can believe it, more people, of course, are taking advantage of nice weather wherever they are across the country. And so there might be less people at their desks, at their jobs, possibly working. And so the summer has been in the past better performance. Now, that's no guarantee, no explicit guarantee of future performance, of course. But you generally do see good performance across the board. Now, thinking back to July specifically, you had a couple things kind of all come to a head as well. But even with all that taken into perspective, the market's still doing relatively well this year.
Yeah. Oh, absolutely. I don't think no one should be disappointed at this point. Yeah.
Oh, no, not at all. I mean, fixed income returns have been mostly flat so far year to date. Well, I shouldn't say year to date. Through the first 6 months of the year, they were relatively flat. But actually, in the month of July, I think the aggregate index, and so that's just a very wide swath and range of some different bonds within that particular index, about 2%.
Right.
So, hey, 2% may not seem like a lot, but in fixed income, that can certainly be a lot.
Sure. Yep. Yeah, so let's talk a little bit about best and worst months, because you just mentioned like summertime, for instance, right? And so I've been looked into a few things, right? And we're coming up on September, right? So right now it's August, so September's coming up. And in my research, I have found that September is historically the worst month. There's a lot of different reasons for maybe why that is, and maybe it's just chance. But what are your thoughts on that?
I think it's a twofold effect. And so people coming back from vacation more on a permanent basis, not as many vacations going on in September, kids going back into school, maybe for professionals, while we don't follow a typical academic calendar in the business world, maybe people are like, getting right back on the grind, possibly with the school-related moment. But on a more serious note, I think there's just been a couple of one-off events that have happened in the past that have really impacted the returns of the month of September. So if you think back, 2008, that was Lehman Brothers, or was that Bear Stearns? So Bear Stearns was in the spring.
Was prior to,
I think it was April or May of 2008. So this would have been Lehman Brothers. And so, of course, while it's extremely bad that either bank failed, but when Bear Stearns failed, that was more or less kind of the first telltale sign that something could be awry. But when Lehman failed, definitely a big red flag going on.
Yeah. Oh, absolutely. And, it's interesting. The Bear Stearns, I was working at J.P. Morgan Chase at that time, who purchased Bear Stearns, and that it was they were supported by the federal government and getting, I think it was $20 billion to make that purchase. And it kind of flew under the radar, but should have been such a signal to all of us that something wrong was on the horizon, right?
Sure.
And then federal government, when it came to Lehman Brothers, they were like, well, no, we're not bailing them out this time. And I guess, some folks would say that that's at least part of what led to the Great Recession in 2008.
Yeah, it led, unfortunately, to a lot of dominoes falling. And I think up until that point, too, just as for some historical context, for such a long time prior to the Great Financial Crisis, real estate was only moving up in one direction.
Sure.
And so for a lot of people, it's obvious taking a look back, hindsight being 20/20 now, but for a lot of people, real estate only went up and up for a long time. So why bet against real estate? So, of course, hey, if people think markets are only going to move in one direction, people aren't going to go take the other side of that trade. And unfortunately, that's where greed can come in a little bit.
Oh, absolutely. Yep. We saw it.
And contrary to Gordon Gekko, greed is not good.
True. Not always, no. So one of the things I read a lot about when I looked at seasonality was the whole idea of sell in May and go away.
Okay. Sure.
And, I think I went into it thinking, there's nothing to this at all. But I started to look at some of the statistics in particular and was a little surprised by what I saw. And in particular, one of the things I saw was that when we go back to 1950 and we look at investing from the months of November through April, $1 would have grown to $99 on average, not accounting for dividends or inflation, right? And when we look at the other months, so the months of May through October, $1 would have grown to $2.46. So a significant difference, right? And even, for instance, when we go back to 1990, the S&P 500 has averaged 3% from May to October, versus 6.3% from November to April. So there are a lot of different reasons that could be, why that is. Obviously, we have the Santa rally is maybe a big part. of what happens during that time. For those of you that don't know, there's what's called a Santa rally, which, folks are getting their year-end bonuses. Everybody's in a great mood because it's Christmas time and they're out spending. And at the same time, end of the year tax maneuvers and whatnot. So,
Sure.
And then you also have, window dressing from some of the fund companies that might be trying to make their fund appear to be a little bit better performing than it is by selling off some losers and buying up some winners.
Sure.
But what thoughts do you have about that?
And so it could be a little bit of a mixed bag. Unfortunately, if I think there was one sure bet all investment strategy, I can guarantee you people would already be all over it.
Sure.
Or we probably wouldn't know about it.
Yeah.
But honestly, because if something's so good, if it's too good to be true, and unfortunately most likely is. And so with that data set, I'm almost wondering, now this is where the nerdy side of me gets into, but I would love to go know the effect of people getting their possible tax refunds.
Sure.
And maybe that's a little bit of a stimulant for the economy as well. But it's when you go think about a lot of these studies, it's so data dependent because if there was a perfect strategy, so exactly towards what you said, sell in May
Right.
and go away till later this year, do you sell May 1st?
Right.
Do you sell May 15th? May 22nd? And then, of course, when you go and go buy on the other side too, because I'm sure you've seen this over your career. I've seen this within my own career. People want to go sell for a lot of reasons, and investing is hard.
Yeah.
Investing, it's emotional. That's why it's called personal finance. But for a lot of people, it's so tough to know when to go buy back in.
Yeah.
So exactly towards what I was mentioning, timing can mean so much for a lot of people because it's very easy to go think about, in that prior example, sell in May and possibly go away. But some people could be riding that high of, hey, I timed the market. I'm doing so well, but how far can that luck really persist on to?
Sure.
Because exactly towards what we preach at TriStar more than anything else, it's all about your time in the market versus time in the market. But you know what? You got these charts. Let's go ahead. Let's kind of go look at some of the commentary here. So what are we taking a look at?
Yeah, so here's a chart. It's the S&P 500 index, total up or down each month. And this is going back to 1928 and through 2023. And so it's taking a look at each month throughout that time frame and how many months were positive versus how many months were negative, right? So the first thing that stands out, of course, is September, right? So in September, going back almost 95 months, right? We have 42 times that September has been up, and we have 53 times that September has been down. So by far, September has stood out as the worst. Now, you talked a little bit about some events in September. Obviously, we also had September 11th in there, right? So I don't know what it is. I'm certain there's no scientific reason that September, or maybe there is, has been bad in the past. But we're seeing statistically that is the case. And then with December, right? I mentioned the Santa rally, and here we show 69 positive times that December has been positive, and only 26 that it's been negative. The other one that I want to point out, because you just talked a little bit about April in particular in tax time, right?
Sure.
April has been was the second best month, right? So 62 times that April months have been positive, only 34 times that it's been negative. So now amongst all that, the other thing I do want to point out is that, so we talked about just months being positive or negative, but when we look at this other chart here, which is the S&P 500 index average percent up or down each month, actually July is the best, right? So July's average return on the positive side is a 4.9%. And even on the negative side, it's also best at a negative 3.2. So even if you're losing less than any other month on average. So that gets back to that sell away point, right? Had you sold away in May and missed the summertime, you would have missed the best month on average, right? Which is July, right? So I think that debunks that adage a little bit, but it is interesting to take a look at some of these charts. What do you think when you take a look at them?
So exactly towards what you mentioned, two other points, very high level, quick takeaways. And so, of course, while these markets are up, there's also numerous down months also thrown in here as well. And so taking a look at the first chart, you can see total number of times up or down. So picking on April in particular, so I'm seeing a bright 62 on there, but I'm also seeing a negative 34 on there as well. And so like what we mentioned, no guaranteed investment strategy.
True.
and people absolutely do need to do their research before trying to implement something like this or in general. But something that I also take a look at the bottom chart there, so the average percent up or down each month over the last 100 years, it's interesting because after the quarter ends, and so after March, June, and September and December, you can see the following month actually be a little more positive. And so it almost makes me think, what if companies weren't reporting the best earnings?
Sure.
People, or maybe they had some bad news come out, and maybe the initial earnings or that earnings presentation might be better for company and people out there and investors. And so maybe that could be easing over some of those fears, possibly.
Yeah.
Again, without taking a look at the data set, it's very tough to go take a look into this. And I've seen, I think that's a good, important takeaway for a lot of people as you go take a look at this financial information. Not saying this isn't factual. I think this stuff is really good.
Yeah.
But always taking a look into who's supplying it.
Sure.
What's going into the background.
Yep.
And then also how they're measuring something too.
Right. Yeah. Yeah. I think the other thing as I think we keep going back and forth a little bit to the charts, but the other thing I would point out is that I did mention how December on average had the most number of months on the positive side. However, if you look at that second chart, you would also see that it had the second worst overall average return, right? So while it was on average positive, it wasn't, it's, not anywhere near, it's in the maybe 10th or 11th in terms of average positive return. So while it has been good overall in terms of number of months, the actual return hasn't been anywhere near the best. So, yeah. I mean, I think in the end, you're right. You do have to consider the data, right? And while I do believe... I did my due diligence and making sure that I was looking at reputable sources.
I like the charts.
Yeah.
I like the charts.
I love a good chart, right? I mean, you gotta.
There's a lot of different ways people can learn and really grasp and take in information. And so whenever I'm in client reviews, and we've shared a lot of client reviews together.
Sure.
I love showing charts because it's a really easy way. I mean, imagine if you were just trying to go describe this without a good visual aid. I mean, you can still get something across, but
absolutely,
it can make all the difference. And I think it also shows how important diversification is.
Oh yeah, absolutely.
For those months as well, because people, when you're in a bull market, stocks are going up. It is so easy to be like, you know what? I think I think it takes some more risk in my portfolio because I'm only experiencing the upside.
Right. Yeah. No, I think there's a tendency. Listen, at the end of the day, it's all about, for a lot of people, it's emotional, right? So when it's going up, people are doing often the very opposite thing that they should be, right? When the market's going up, folks are feeling good. I want to buy in. They're buying in oftentimes at a high because their emotions are positive at that point in time.
Absolutely.
Then the market turns. They're coming down, not feeling so good, gets to a bottom or near a sort of a trough, right? And they're like, nope, not feeling good anymore. I'm getting out. And so they're doing the exact opposite, right? They're buying high and selling low. And that's really where a professional advisor is extremely valuable because I think more than anything, we are emotional advisors, right?
Absolutely.
Because folks call us, hey, I'm scared. Markets are down. Like we just had it a couple of weeks ago.
A little bit of some volatility. When you really dissect all the news events, I mean, you had things going on with Japan and a possible yen carry trade.
Right.
You had tech earnings. You had a bad jobs report, bad employment report. And so if you couldn't really dissect all the pieces of those little things of information from the onset and from the outside, it could be like, whoa, hey, what's happening here? What's my advisor got me invested into? But really, I mean, this is, I think, where having a team-based approach really shines because within, I mean, just talking about it from TriStar's perspective, we each have our own little personal duties, what we do. So as an investment team, we're looking at this, we're talking about this, we're really dissecting, is it like taking a look back at one of those events, is it really as bad as what it seems?
Right. Yep. It definitely feels at the moment, it's scary. And I acknowledge that, right? When markets do experience a pullback. But, the other thing you have to remind folks of is that they've often, they're watching the news. They're hearing about the Dow Jones and the S&P 500, maybe forgetting that, they have a large percentage of their assets invested in fixed income instruments that are not nearly as risky, right? I mean, we did experience some risk in 2022 with respect to some downside with fixed income, but that's quite uncommon. And so, just reminding folks that, I mean, hey, stocks are down, but keep in mind, 40, 50, 60% of your portfolio is in fixed income. So while, some of the portfolio is zigging right now, we have another portion of the portfolio that's zagging. So,
Or most people don't know that the Dow Jones Industrial Average is made up of just 30 stocks.
right. Yep. It's a very small sampling. Yeah.
The index is also pretty old. And so as you can imagine, it's going to have a little bit of if someone says, oh no, the Dow Jones dropped by 1,000 points,
Right.
still really bad, still very bad. But
Yeah.
on a percent basis, is it as bad? Possibly, possibly not. But
Right.
being able to go take everything with a grain of salt, take a step back, analyze situation can really help reduce, in my opinion, some panic.
Oh, absolutely. And the other thing I really like to talk to clients about when we do experience volatility, I want to go back to the financial plan, right? Because you talked about the team approach. And that's where, for me, being able to lean on Will, who's on our portfolio management side, and say, hey, Will, what are you thinking? What are we seeing here? Should our clients be concerned? Generally, the answer is no, right? We just need to stay the course. But the other thing I really like to do is take folks back to the financial plan where we have planned for those instances, right?
Isn't it like 10,000
Oh yeah,
different
we're
scenarios?
running 1,000 different scenarios, right? So a client comes in, we ask a lot of questions, they provide a lot of information, and we run a Monte Carlo simulation, which basically runs through 1,000 different market scenarios or probabilities, and comes back and tells our clients, well, given what you've done and what you are doing, this is the probability of you being able to reach your goals. We've planned for these for good circumstances and for bad circumstances. So you really have to A, maintain a long-term perspective, and then B, refer back to the plan, hey, and remind them, we planned for this. We knew that these types of things were going to go happen. Frankly, it's normal. We are going to see volatility. You said it yourself. What in any given year, on average, we see the market pull back 5% twice throughout a year and 10% once throughout any average year. So it's normal, right, that we see volatility like that. So we just have to keep it in perspective and just calm the nerves. Because
I couldn't agree more.
Yeah.
I would say it's more abnormal if we don't see volatility. I mean,
Right.
don't get me wrong. I would love not to see any volatility in a possible year, but hey, when it comes around, just remind yourself, this is natural.
Right.
This is fine. Let's go take a long perspective of what's really going to happen with this portfolio, because there's a decent chance with a little bit of a pullback. Let's just go. I think the most recent pullback was maybe 4 or 5%.
Right.
Are we really going to remember that pullback 5 years, 10
Right.
years,
No.
15 years from now?
It's going to be a blip on the radar, right? And so I would say when I work with clients, particularly clients that have been with us for a long time, I have a couple in mind, but when you look at clients that have been with us 10, 15 years, even longer, right? And you look at just the simple charts, right, and how their portfolio, and we're talking through bad times, through good times. They've been with us during the Great Recession, right? And the chart begins to flatten out, right? What was a visible downturn, right, in their portfolio, it really flattens out, and it looks more just like, oh, there's a little blip on the radar, right? So it's all about, you said it earlier, it's all about time in the market, not timing, right? And that also gets back to that sell away, right? I mean, to me, you stay in the market at all times. There's some simple fundamentals that you're always keeping in mind, right? You're always remaining diversified. You're always rebalancing, right? So that if there is volatility, making sure that you've corrected your account for that volatility so that there's not a big drift. In particular, like how your percentage of stocks versus bonds,
Sure.
You're not taking on more risk than you intended. And the other thing I'd say is that it's important for folks to always keep an emergency fund on the sideline, because you don't want to compound losses in the market.
Absolutely.
Right. So, let's say there is a 10% pullback and, you're going to buy a new car, but you didn't have a reserve on the side, and therefore you have to remove funds from the portfolio.
Realize the losses, because
Sure.
before that, hey, it's just unrealized.
Sure. You could even, right? You could realize gains in a down market and make things even worse, right? But the point is you have that cash on the side, and then you can use that as opposed to, and we use other things for clients too. Lines of credit would be an option, right? So
Sure.
if the market's down, sometimes we leverage securities in a line of credit so that rather than having to withdraw from the portfolio. You can withdraw from the line of credit, wait for the market to rebound, and then you withdraw from the portfolio and pay off that line of credit. But so there are a lot of different creative ways to manage those types of things. One other thing I'd mention that I'd say helps with volatility a lot, particularly right now when markets are, breaking all-time highs, seems relatively regularly. For me, at least, something I'm very comfortable with, and I suggest to a lot of clients when they come to me with cash, is dollar cost averaging in.
Sure.
Right?
Yeah.
So rather than, let's just say in theory, someone came with $500,000, rather than taking all $500,000 and investing it right away, we're saying, well, let's put in $100,000 to get the account started, and then each month, on the first of each month, we're going to invest $50,000 over the next whatever it may be, 6-12 months, right? And maybe we'll speed that up or slow it down depending on trends we're seeing. Like if we see again a 10 or a 5 or 10% pullback, we might say, hey, let's get more in today while we're on the downside. And Will and I are having these types of conversations quite frequently.
Oh yes.
Yeah.
No, but all in good comfort too. And I think, this goes back to a prior point that you mentioned, but I think it's just so powerful too. If you are in a downward market and you have cash already sitting on the sidelines, like for a lot of people, it's not even bad for people if they're comfortable with it, holding 6 to 12 months worth of expenses just in cash.
Yeah, absolutely.
Especially if they're retired, that's the money that they really rely upon, because at that point, I'm like, hey, 6 to 12 months from now, we're not even going to talk about this. We're not going to even be thinking about this. And so take that anxiety. You have this cash sitting on the sideline.
Right.
You are all good.
Exactly. And another strategy, something we think about when we meet with clients and are reviewing their portfolios. Let's say that they've drained some of that reserve, right? And they're down to maybe 3 months and the market's been performing well. We might say, let's say they take a monthly income regularly. Well, we might say, you know what, let's sort of speed that up. Let's take 6-12 months now, just put it off to the side, right? We'll keep, particularly right now when we're getting, over 5% on money market, right? Like let's guarantee ourselves a 5% return. We'll sort of put that cash off to the side, lock in our gains, and not have to worry so much about volatility. So, I don't know, maybe sometimes people that maybe aren't clients of ours think that we're not very active, but we are extremely active when we think about client management and just the many different tools and, given the experience that we have and the great team that we have, we really keep a very sharp focus on our clients.
Proactive, never reactive.
Yep.
So that being said, proactive, I do have to ask at this point in the podcast episode, Kevin, what have you been watching?
Oh, gee. Boy, you put me on the spot. I will say, I just saw Trap.
Okay.
I don't know if you've heard about this, but
I think maybe, possibly.
So this is an M. Night Shyamalan movie that just came out last week. If you know me, you know that I love movies. And actually, I have a thing in particular with my boys where we really like to watch horror films in particular.
Okay, yeah.
Now, I wouldn't say Trap is a horror film. It is an M. Night Shyamalan who's known for more, I don't know, scare.
So are you more like the scare factor or possibly like an alien like kind of scare, possibly?
I'm more of scare factor.
And if it's like more like unrealistic or like more like realistic?
Right. I like realistic. Right? The more real it is.
That just creeps me out.
Yeah. The more real it is,
I avoid watching those movies.
Yeah. In fact, we watched a movie. Oh, what was it? Me and the boys just watched a movie a couple of weeks ago. And afterwards, I don't know, it was maybe 11 o'clock. It was on a weekend or something. And the boys were terrified, right? So they're like going upstairs, making sure all the lights are on.
Turn the light on, light off.
Yeah.
Wait, light on?
Exactly. Right. So we have a good time with it. And it's just, I don't know, one of those things that we like to do. So how about yourself?
I got to be honest, it's probably been 12 years since I've watched a horror movie.
Okay.
They really get a little too close to home now. I do think it was, I can't remember the name of the movie. It came out maybe 2012, 2013.
Okay.
Just some maybe they're just all scary. My scare factor is not that high.
Yeah.
Got to be honest, but I know what kind of movies I like. Netflix. And so they just released, or I think it would have been a month or two now, but last year they had a series all about the quarterback.
Okay.
So quarterbacks, quarterbacks, the NFL. And so
Receivers.
I'm just starting receivers. Yes. And so I think it's so cool to go take an inside look of the preparation, the work, but then also they're all family people.
Yeah, right.
they're all family people at the end of the
They
day
are.
too. And so I really enjoy seeing that side because so often it's just helmet in your stance, ready
Sure.
to play,
Yeah.
game on the line.
Yep. Yeah, I think it's also important, like having kids that are growing up, right? And granted, my oldest is only 17, right? But some of these guys you're watching are what, 23, 24, 25 years
Oh,
old.
yeah.
And I can think back to myself at that age and it's easy to sit back on the couch on a Sunday and yell at the television and how could you drop that ball, But they're people just like
They're just
you and me
people.
and
Yeah.
us and everyone, right? And these are young guys in most cases, right?
So much pressure.
People get so critical, like Monday morning quarterbacking, complaining about these guys. And they're people with feelings too, right? And I've heard it in other sports, in particular. I watch a lot of soccer, but where it can really affect these guys and their mental health, the way that people talk about them and say a lot of negative things.
So much writing on the games, and of course, I'm guilty of saying the possible come on, when you're watching a game, but you have to go think about. I mean, these are athletes in the peak,
elite,
the most elite physical condition that you could possibly be,
and we're complaining about
we're complaining, and they miss like a first down by a couple inches. Like, oh, you could have dove, you could have got there.
Exactly. How do you get alligator arms? Well, there's a 270-pound right linebacker or whatnot waiting
Who can
to crush
run way
them.
faster than you can on the couch.
Right,
Yeah. And then I'm just waiting for a couple other TV shows to come out with new seasons. So I've been watching a little bit of Yellowstone. I think I mentioned that a couple past episodes too. I haven't watched Kevin Costner's new movie, American Saga, but hopefully soon.
Oh, yeah. Right.
Big Kevin Costner guy.
Yeah. Yeah. Oh, yeah. He's terrific. Going all the way back to, movies of the past, like the Robin Hoods or Dances with Wolves, one of the
love
best
that movie.
of all time. Yeah.
It was still on Netflix even, I think, maybe a month ago. I rewatched it. It holds up so well.
Oh, yeah.
So well.
Yep. I guess the other thing, this is going to date this a little bit, but the Olympics.
Yeah.
Right? I was watching a lot of the Olympics. Did you happen to catch any of the Australian breakdancer?
I think I saw some highlights.
Okay. I mean, that's some good stuff. That's...
There's a lot, whether it's that, there's basketball. Isn't there Olympic golf now too? There is.
Yeah, there is.
Scotty Scheffler, right?
USA, yeah. Hey, U.S. did a fantastic job, kind of as always. There was some... did you see the runner from Grand Blanc, Michigan?
No.
That won 2 medals. Yeah,
Wow.
in long-distance running, which is not
That's
something
phenomenal.
that the U.S. is typically known for. But I guess he's maybe born in Canada, but graduated from Grand Blanc High.
Okay.
So, yeah, even some hometown glory.
So I do have to ask,
mid-Michigan.
Kevin, 4 years from now, sorry to interrupt, 4 years from now, when the Olympics are in LA, I know that they're playing soccer games all across the U.S.
Yeah.
Are you going to try and go to one of the games?
Well, I'll tell you what, 2026, the World Cup, is it 26?
Oh, I thought it was 2020 with the Olympics are playing soccer, but maybe it's 2026 then.
Yeah, I think it's 2026.
Apologies,
The World Cup. World Cup is coming to the United States, Mexico, and Canada.
That must be it. That must be it. Okay, not the Olympics.
And I'm sure soccer. I would assume most of those
There'll be some
games
games,
will be
probably
around
more
California-ish area. But yeah, World Cup coming in 2 years, and I'm absolutely going to be trying to catch some games. I really don't care who I see, but I'd really like to see. Some team. I'd love to see the United States, probably Italy, number one, who I'd like to see. Would love to see Spain. Spain won the Olympics. They won the Euros this summer. So Spain's really kind of leading the way right now. Them, Argentina, Portugal, France, there's all great teams that I'd love to see.
Sure.
Yep.
Well, until then, might need to go reserve some of those tickets in the future.
Yeah, absolutely.
But thank you, everyone, for listening to another great episode of Mid Money. Hope you all can have a great rest of your day. Thanks again.